Hey y'all, welcome to Dear Business Owners, where today's topic is all about sales tax, right? So we're talking about, what is sales tax, what is considered a taxable item, how you should be treating an item that is considered taxable. So I'm going to be talking about just a lot of the different obligations and the requirements that come with selling a taxable product. And I know for some of us, we don't even know if the product we're selling is taxable. So that's definitely a part of what I'll be talking about today. Okay. With that being said, my name is Rose Brown, also known as the Accountant Therapist, and I am the CEO of Brown's Fulfillment Consulting and Accounting Firm. So, as it pertains to sales tax, as I'm talking today, just know, of course, this is informational because every state looks different through the lens of sales tax, especially as we talk about nexus, which is something that I'll talk about later in this video. But you want to know that every state is different, and especially if you begin to sell products within another state, what does that look like for you? Okay, so before we go deeper into anything, let's define what is sales tax. So sales tax is a type of tax that is levied on products or services that is considered taxable within a state, which is when the person who is selling a product collects it from their consumers and remit it to the state or the local government. So really, how I want you to think about sales tax is that you're a middle person within this entire transaction. So you sell a product to your consumers. The consumer pays for your product, plus they give you sales tax. When the entire income comes in, the sale is yours, of course, for the business, but the tax portion of it that you've collected is not yours. Okay. So you take that and you pretty much put it right back to the state. So you take it and pay it right back. So just know this is not your money. Okay. You're the middleman within this entire transaction. You sit here, you collect, you remit. That's literally how sales tax work. So the first thing you want to note is, well, how do I identify if my product is taxable? Now, it's important to know not only products are taxable, services can be taxable as well. But again, every state looks different. So you would have to pretty much look within your Department of Revenue for your state to determine if your product is taxable. Oftentimes, more often than not, products are taxable, right? It's rare that a product may not be taxable within a state, sometimes depending on the type. But again, if you aren't sure, visit your state's Department of Revenue site to get a clear understanding of whether or not your product is taxable. Now, for your service, that's going to be a little bit harder to navigate because not all services are taxable. I know for some states, they'll say the labor that you have to perform in regards to, fixing a car, things of that sort, they'll consider that taxable, but not other services, right? So you want to make sure that you identify that particular set of information from your state's Department of Revenue that will let you know whether or not you have a taxable service or product. Now, if it gets to the place where, hey, I'm really in the middle about this, I don't know if it's really taxable or not, what you don't want to do is not collect taxes when you were supposed to, right? And even if you don't know, they will say you should have known, right? So if you get to the place where you're in a gray area, you simply don't know whether or not it's taxable, give the Department of Revenue a call within your state. Ask them, talk through it with them, because sometimes it's a real gray area, and you have to make sure that you come up with the right answer, because if you don't, it's going to be very expensive further down the line. Okay. Now, let's say, yes, your product is taxable, right? What do you do in this circumstance? You have to collect. Actually, you must collect taxes from the consumers, right? As I mentioned, you're pretty much playing the fiduciary role, right? You collect and you give. Now, that's a process in and of itself, right? So you have your product, you say, hey, this is such and such. When the consumer purchases it, they have a sales tax attached to it. You collect it and you remit. Now, in order to remit, you actually have to be registered to do so. And every state's site look different. And this is why I keep stressing the difference in the states, right? New York looks a lot different from Pennsylvania versus Georgia, especially with, filing requirements, you know, uh, frequency, all of those sorts of things. They differ based on a variety of things. So you want to make sure that you are registering with your state. Oftentimes, when you move forward and do the registration because you have a taxable product or service, when you register, the state will ask you certain questions such as, hey, what's your taxable sales for on average per month or per quarter. This way they can gauge whether or not they will require you to file on a monthly, quarterly, or annual basis, right? Oftentimes it's a quarterly. In some states, they'll require you to do monthly, even if it's a small amount of sales. Okay, so you want to make sure that you're registered. That's literally the first step, registering. Okay, now it's important to understand what nexus is. Nexus is what lets you know whether or not you're supposed to be registering within a state, even if you don't live in that state or have the business within that state, right? So nexus was naturally a physical location assessment, right? So it will basically say, and this was back before Wayfair. It would say, hey, you're located here. This is the state that you need to pay taxes in because you have your business and you're operating from here. Now, after that particular court ruling, they came back and said, you know what? That's not enough. If you sell a certain quantity within a particular state, you hit nexus. And once you've hit nexus, you now have to register with that state and begin to collect and remit sales tax. Now, quantity is just one of those characteristics that may lead you to have to register for sales tax within that state. But if, let's say, you had sales rather than quantity, so let's say you had $100,000 in sales, you may hit nexus within that state, and then you may have to register. So you have to understand, know if you've hit nexus within a particular state. So for all my folks who sell products on multiple sites, right, or multiple locations, you want to make sure that you're registered and you're collecting. Because whether or not you collect sales tax, you still have that filing requirement. You still have to pay it, right? So even if you didn't collect it, you still have to pay it. So that's where it becomes a burden for businesses, not knowing that they have to collect, then realize that, hey, I didn't collect anything, but yet still I have to pay. So that's coming out of your bottom line, and it becomes very costly, once you begin to add all of those, not only the taxes, but the penalties that come with it, right? Every state looks a little bit different. But certainly all states attach their penalties and interest for late filing, underpayment, those sorts of things. Okay. So when it comes on to collecting sales tax, you can either do it yourself, the collect and remittance process, or you can hire a firm or folks who actually specialize in filing sales taxes, right? So that looks different. And taking it on all by yourself can be worrisome. It can be a burden. I know for some folks, it's just one state that they have nexus in because they're located there. They don't do much else outside. So it's just one state. If you go through the process, someone show you the process of how to file it and you're confident and comfortable, sure, no problem. Go right ahead, do it all by yourself. But if you begin to incur those additional states that you actually have to file sales tax in, you absolutely want to hire the professionals to do it because you don't want to mess it up. And trust me, we do sales tax at my accounting firm. It can be very time consuming, right? Different states have different requirements. And sometimes each state have different localities within it, and you have to remit and file sales tax based on each state, each county's sales tax rate, all those sorts of things. So it gets very complex, very complicated very quickly. So if you anticipate having more than one state that you have to file sales tax in, I would say call in the professionals, because at that point it will drive you nuts. Literally, it will drive you nuts. Okay. Now, for some states, they have it where shipping is also taxable. And I know for some folks, they won't charge any sales tax on the shipping, but the states actually do assess taxes on those shipping. So you want to make sure that you're accounting for that as well within your pricing, how you request that folks have to pay you. Okay. All right. Now, it's important in that same breath to understand not only is the shipping taxable, right? Depending on the state, not all states do it, but you also have to know when it comes on to reporting those sales tax, is it my gross or is it my net sales, right? Oftentimes, well, it should be on the net sales, right? So you want to make sure that you have your gross here. If you made any returns to customers, if you did any refunds, discounts, anything like that, you want to take that out so that you can get to your net, because ultimately you don't want to pay sales tax on your gross when you've returned items or provided a discount. So the sales tax is based on that net sale that you had from those products, right? Or service. Okay. Now, as I mentioned, if you have to file sales tax in multiple states, what does that look like for you? Okay. Not only do we have to file, but we also have to register. Registering in one state doesn't mean you register in all states. You have to go to each state and register within their Department of Revenue for sales tax. And that registration process, again, it looks different for each state. Every state has their own website, and some states are a little bit more modern, whereas others are just really not with the times, honestly. So you want to make sure that you're taking these things into consideration, right? Um, let's see what else we have here. Now, if you oftentimes sales tax is due on the 20th of a month, depending on the frequency that you have to file taxes in. So if you have to file taxes on a monthly basis, ordinarily it's the 20th after the end of the prior month, right? If it's quarterly, it's the 20th of the month after the quarter is ended, right? So you want to keep that date in mind, the 20th. Okay. All right. Now, if it's the case where you can, which I highly recommend, filing early, oftentimes different states will give you a certain percentage of discount for filing on time, for filing early. So at that point, they're pretty much giving you an incentive to file on time, to reporting everything to them on a timely basis. Okay. You definitely don't want to fall behind that 20th date, because ultimately we have penalties and interest, and now they're penalizing you for filing late and not paying on time. Okay. Now, if it's the case where you are selling on a e-commerce platform, that could be Shopify, that could be Amazon, you have to understand or know that they're either collecting and remitting sales taxes on your behalf, or they are handing over that remittance obligation to you. So they'll say, you know what, I'll collect, but you are responsible for filing that. So you have to make sure that you understand what your responsibility is from these third-party merchant companies, right? So for example, Amazon, they pretty much say, hey, we'll take care of everything. You're good. We just collect from it. We're good. No worries here. Where Shopify, it's not always going to be the case, especially depending on your subscription level. They'll say, hey, you have to collect sales tax in this state. You've hit nexus, or you haven't registered. You need to register. So they'll give you a little nudges here, but they're not following through on your behalf. So ultimately, with sales tax, same as any other type of taxes, it's your own responsibility. It's you and your business's responsibility. So you can't just say, oh, Shopify was doing it for me. No, they won't. No, they weren't. And also they have these things in their fine print, right? Which we don't oftentimes read, but you have to make sure that you understand what your responsibilities are as a business owner collecting sales tax on taxable items that you need to remit to the state and local governments. Okay. So with that being said, I want to touch on some do's and don'ts because similar to having pros and cons, you want to be in the pros and not the cons, right? So it's important to note that sales tax that you collect from a customer is not your money, it's not income to you. So you cannot take it and pocket it because ultimately you are a fiduciary to the state. You have to pay it back to whomever you collected it for, right? So you collect it and you pay it out. Right. In situations like that, I would highly recommend that, business owners have a separate tax account. So when you collect your sales tax, you have a separate account that you put it in so that you know that, hey, this is not my money. I should not be touching it. And it's all there when it's time to go ahead and pay it out. So it's never income nor is it expense. It shouldn't be an expense. Okay. So ultimately, sales tax tend to be a liability, right? Because you collect money and now you owe it to the government. So ultimately, the sales tax should be a sales tax payable on your balance sheet, right? If we're keeping financials, and then you paid out to the state or local government when it's time to file and remit those sales tax returns. Okay. Now, if it's the case where you were supposed to collect sales tax, but you did not, you then have to pay sales tax out of your pocket. And that's in a situation where it would become an expense to you and your business, right? Well, not necessarily you, but the business itself, because you're taking money from expenses that you've incurred. But ultimately, you want to just go ahead and collect those sales tax and remit them accordingly. Okay. Um, Now, for sales tax, as I mentioned, you can go ahead and create a separate sales tax account or a tax account where you just set aside all your money for taxes that need to be paid. This account I don't touch because it's not my money. It's a liability to me. I owe it to someone else. Okay. In a situation like that, you can also consider making prepayments. So, similar to how you would make estimated tax payments on a quarterly basis, you can make prepayments to the quarter in which you collected sales tax for. This way, the money is sitting with the state or the local government, and you just go ahead, file the return. They have their money. We're good. Less things to worry about. So, the goal here is to make sure that you are ultimately in compliance with sales tax rules and regulations of your state and local government, right? Because taxes put people out of business, and sales tax is one of those taxes that have been gone unnoticed for the past couple of years. Not a lot of folks pay attention to it, but states are really coming after people for these sales taxes that are owed to them. And over time, like, this begins to add up. When I say that the penalties and interest is a slap in the face, listen, wake up. You have to make sure that you're on top of these sales tax returns. Okay. So, in an effort to conclude today's topic, which is sales tax, I talked about what sales tax is, which is tax that is levied on taxable products that must be, or service that must be paid to your local or state government in which you have nexus in. And nexus is whenever first you're located within a particular state, and then it becomes if you've sold a certain amount of quantities or certain amount of sales within that particular another state, right? So it looks different depending on the state that you're selling in. And also, we talked about filing frequencies. Oftentimes, it could be quarterly, it could be monthly, annually, depending on the state and the amount of gross sales you may have within that state. We also talked about the fact that oftentimes they're due on the 20th of the month, right? So the 20th after the period is ended. So if it's a quarter, the 20th after the quarter is ended, the month after the quarter is ended. Okay, we talked about a couple of do's and don'ts. Knowing that sales tax is not your money, this is not income to you. You need to pay it back to the government. So you want to make sure that you set aside those funds accordingly. Consider setting up a bank account just for sales tax so that you never think that this is your money. It's actually a liability to you because you sit in the middle, you collect the money, you hold it, and then you pay it. You never hold it and keep it, but you pay it. Okay. So that's it for today. Sales tax is a very complex topic. You want to make sure that if you're not confident in doing it on your own, that you connect with a professional as soon as possible. This way you are in compliance and you don't have to worry about any government agencies coming to pretty much collect from you. Okay, we don't want to be in collections, we want to be in compliance. Okay, I'll see you all next week.